forecast between 24 and 2030, the hyperscale data center investments would be $2.2 trillion globally. I see Amazon's budget this year is $50 billion. They've already committed $47 billion. So we're not talking nickel dime guys wanting their share of nuclear. So again, I mean, it's just kind of, as I've said, it's everywhere you look. So at what point does the term market start to pick up? I think we're starting to see the early next phase.
Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucy, and some of you know me as Triangle Investor from social medias. Dustin Garrow is back to my show. No introduction is needed for this uranium veteran with 50 plus years of experience in the industry. Dustin, welcome back. It is always great to have you.
Well, thank you for having me on. It seems like, we spent time together in London during WNA. It seems like it was almost yesterday or a year ago with what's going on. So amazing times.
These times agreed, and a lot of it actually happened between London and now. I mean, with the Microsoft, with the Oracle, with the Google. We have every day positive news in uranium. How would you comment that? Have you ever seen that in your 50-year career?
No, that's my message I give on say interviews and discussions. You know, for the years I've been around, and I have never seen the nuclear industry in the situation that it's in today from a positive standpoint. In other words, I was around in the 70s when we were building a lot of reactors were built, but now the focus on nuclear as a technology is spreading so quickly, and it's now going beyond the utilities, which I find really very, very encouraging, but very interesting and very uncertain. I think for particularly the utilities in their future procurement of uranium. So it's again kind of, I say it's overwhelming. As you say, every day when you wake up, there's several new items, all of which are positive. It's something to behold. Let's put it that way.
Definitely. I want to talk with you a little bit about the uranium inventory. To your best knowledge, how much of the above ground inventory do we have? Who holds that, and how do you see that going forward?
Well, I think you're aware that it was 2 years ago that UxC put out their 2-year inventory assessment, and during WNA week put out their lead article that the era of excess inventory is over, and that was what we would call a bombshell, because I think a lot of the industry hadn't really focused on that. They were aware that there was a lot of inventory around. But if you really go back, I won't give too much of a history, but, per post-World War II, I mean, uranium production exceeded commercial demand up until 1990. So we developed a very large inventory of uranium, various forms, natural, UF6, enriched product, HEU, you name it. But the crossover was important because since then, almost 35 years, we've been drawing down inventory in various forms, be it the HEU downblend program, just consumption of various inventories, kind of across the globe. I understand that their latest report, which I've not seen a copy, still shows a fairly large above ground inventory. Let's use a working number of, say, 1.5 billion pounds. Now, that's a very large number, And it's almost 8 to 10 years of current consumption. But what they've looked at, and I think the market is beginning to appreciate, is who holds that inventory and what is it being held for. Obviously, the big holder now is China. I hear that the latest UX analysis shows like 640 million pounds that the Chinese, now you can call it the utilities, the government, but it's in the Chinese umbrella. So it's approaching almost half of the above ground inventory. And so some people would say, well, they don't need to then acquire uranium for years. Well, they're actually out, extending long-term contracts, which they've announced with Cameco and Kazakhstan. Production, they obviously have the mines in Namibia, a mine potentially in Niger, involvement in Kazakhstan. I hear they've been doing some accumulation still in the spot market because their view is they can build conversion, enrichment, fabrication, but they can't build the uranium. So they're stockpiling the uranium in significant volumes. The utilities, globally all hold strategic inventories, can be anywhere from a year to 3 years. Japan wanted 4. And so when they were consuming 20 million pounds a year, they wanted at least 80 million just as a buffer. The fuel supply chain, there's working inventory at converters, at enrichers, at fuel fabricators. So when you really work through it, the amount of inventory that seemingly is available for transactions, particularly in the spot market, and that's what's really driven the spot market, is the availability of inventory that at some point people would want to sell. Okay, price goes up high enough, you mobilize, you free up some inventory. Anyway, that now I think is becoming increasingly limited. I mean, UX reported recently, I think, about 34 million pounds of total transactions so far this year through the first 9 months of the year. Now, we'll probably get back up to the 50 to 55 million pounds. But what I'm sensing is kind of the restricted availability. The traders are looking further afield, let's put it that way. I think some of the producers, the news out of Kazakhstan, as they've cut back not just a little bit in their guidance for 25, but it was 15 to 16 million pounds. Now, a lot of that was to go to Russia and China, but at the end of the day, those are pounds that won't be coming out next year. Now, they say they have enough inventory, they'll be able to meet their deliveries. I'm not questioning that, but you put that together with Niger, what's gone on there with the coup and the effective nationalization, I think, of a number of the deposits and projects. So you're really looking at, a demand scenario of as you saw in London and heard, crippling nuclear by 2050 has now become the kind of, not necessarily the base case, but pretty much is. The IAEA just came out with their annual forecast. They're not known as doing a lot of promotion of nuclear. They tend to be very conservative, they're the overseer of the technology. And their high case, goes to over 900 gigawatts by 2050, and two and a half times an expansion of nuclear. So it's everywhere. So, to get back to a question about inventories, still a large number, but those that hold it are holding on very tightly, and in some cases trying to increase the level that they have. So that to me is a fundamental change, one of the many that we're seeing in the market is the lack of available material to transact kind of the spot business. And so I don't see us going to 100 million pounds in the spot market again, maybe for decades. So,
yeah, Dustin, we are seeing some new heading and initiatives where there will be no buildup of new nuclear reactors without secured uranium first. And we are seeing the new reactors which will be built for 100 years or even more. Do you see that really happening?
to go back a little bit in history, back in the 70s, I worked for a nuclear utility in the US, and we had an operating plant, Trojan, and also proposed plants, one called Pebble Springs. At that time, the Nuclear Regulatory Commission required the utilities to demonstrate that they would be able to acquire fuel before they would issue an operating license. There were consultants that made a living over those hearings on where's the uranium, how much, kind of red book data. And so we've not seen that really for a long time. But I know on the SMR side, there was interesting testimony by Dow Energy that wants to put in a 4-pack of 90 megawatt micro reactors at one of their plants in Texas, petrochemical plant. And the head of energy for Dow said, well, the provider, the vendor, has to clearly demonstrate that they have fuel availability for an extended period, or I'm not ordering those reactors, because they can always get natural gas. So it's natural gas fired heat source now. But so I think going forward, will fuel availability in general, and certainly uranium availability, be a question that is asked more and more. It's coming up on the data center side. The hyperscale data centers, which we've talked about, which is really taking on significant momentum. I mean, I've been, again, pleasantly surprised, but they're doing these agreements in the US so far. The big one now is Microsoft with Constellation, a 20-year power purchase agreement at apparently a price above, quote, slightly above market. So they're willing to use the term overpay to have secure, 24-hour reliable, zero carbon power for data centers. And so that's what we're beginning to see, I think, more and more. And as you mentioned, Oracle, Larry Ellison just came out a week or so ago and said, oh, they have a site where they've got 3 SMRs permitted. Now, he wouldn't say where the site is, but he's talking about a gigawatt, give or take. I've heard it's 800 megawatts. It may be, he said, slightly over a gigawatt. So these facilities have huge power needs. And what they're doing, I had a meeting with a utility fuel manager just last week, and they were saying, what they're calling behind the meter. So in other words, they want the power to come directly into their facility from the nuclear plant and not get it off the grid, because they don't trust the reliability of the US grid system. So it looks like you're going to have it be Susquehanna in Pennsylvania. Now we have T at 3 Mile Island. Duane Arnold in Iowa apparently is now being looked at. And these are reactors that have been shut down. I mean, TMI-1 operated till 2019. So it's been shut down 5 years. And so they now have to go back. Palisades has been shut down for years. And what will be interesting is how do they, let's call it, refuel those plants. In other words, over 5 years, have they removed the core and disposed of it? I don't know that, but if they have, a core for a big unit, 2 million pounds. So I think that that demand factor is yet to be put into the equation, and it's all on the upside. So it really is something else. We've not had to deal with it before. Let's put it that way.
Exactly. You mentioned utilities. If we see the most conservative scenario of supply-demand gap, that is going to be a wild ride for uranium. We agree on that. But what will happen in a scenario where some utility will not be able to secure uranium? What could that scenario do for uranium prices? I remember you and I talked before about the possibility of uranium auction. How will that resolve?
Well, I think that, that's a topic that really doesn't get discussed much. I think the utilities, and particularly in the US, as you know, still the largest program, probably be eclipsed by the Chinese by 2030, but the least level of coverage for the least period going forward. So in other words, they've had the most exposure. There have been whispers that some fuel cycle companies have been doing that analysis and saying there could be some reactors that, they have to maybe extend their fuel cycles. They may have to reduce their output levels under, kind of a worst case scenario where, not to say they can't get the fuel, but it's delayed, deferred, so they can't have it on site when they actually would need it. So what does it do to the price of uranium? I mean, I'm an economist by training, which I think you know. And if you can't get a needed commodity, what's the value? I mean, there's people say, oh, the price can't go above $150. And, well, why not? I mean, that there's no limit if there's a restriction on availability of uranium in the future. And that scenario, each day that passes and the utilities don't sign long-term contracts at, has been called sustainable prices, which is a code word for higher prices to allow not just the restarts. I mean, they are coming along, let's face it. MacArthur and Langer and, Honeymoon and, Encore with Rosita and Alta Mesa. Yeah, they're moving forward. But, as I think we've discussed, if you add all that up, I think MacArthur is a different kind of part of that, was always going to be, have a restart. It doesn't add up to a whole lot of pounds. Pick a number. Let's be, 10 million pounds. It's good to have, but it does not address the potential supply challenge, let's call it that, which looks like before 2030. In other words, I've had, analysts say, 2027, 2028, things could get really difficult. One utility in the US has told its management the situation is kind of bad right now for conversion at $71, enrichment at $180, I think. And uranium, the spot price, 82, whatever. And we'll talk about the term market, I'm sure, in a minute. But he's telling them the next 5 years. He said, we're in for a rough ride in making sure we have enough fuel. So, there are some of the utilities that are acting on that. They're beginning to, a utility came in the market just late last week for deliveries 28 out to the early 30s. So we're beginning to see more of that, I guess. But I think uranium could become what the economist would call a very dear commodity which suggests upward price pressure. So,
Yeah, let's agree. Let's talk more about the long-term market. What are you hearing and seeing? You just said that you heard about this deal, but do you see more RFPs coming soon? Not just more, but bigger RFPs.
yeah, it's kind of interesting. Last year, UX reported a fairly robust term market. I think the number was 150, give or take, globally. So not yet at that famous Cameco replacement rate, but kind of getting up there. This year, it's like 50 is all. And the U.S. utilities in particular have not shown a high level of interest in signing new term contracts. Now, I think what they're looking at is the waivers under the Russian ban. Will they be granted? The Centrus, the enrichment broker, basically, right now it's got the only public waiver, and it's for 24-25. And the Department of Energy said, well, for 26-27, which would then be the end of the waiver period, you've got to come back with, I think they're saying, a better explanation of why you can't find this fuel. In other words, they're saying the economics are not an overwhelming factor, it's availability. And I'm hearing some of the U.S. utilities are actually really trying to decide if they will apply for a waiver, depending on their dependency. The 25%, let's use that as a annual, that's not spread evenly over the utilities. There are some that have zero, they've never dealt with the Russians, and there are some that I've heard are above 30-35%. So they're very dependent on Russian deliveries. But under the waiver program, the Department of Energy will publish a list naming the utilities that have been granted waivers. Now, up to this point, that's not happened. In other words, it's kind of the black hole. The material comes in and it's delivered out, but you really don't have a definitive picture of who the individual utilities are. And they've expressed concern about that. I think part of it is they really don't want the American Ukraine, organizations to be picketing their corporate headquarters somewhere saying, you're supporting the Putin adventure into Ukraine and we want it stopped. So because those deliveries are very low cost. From what I've heard, the SWU is $65. The UF6 is probably 40 or less. The Russians have never renegotiated the prices. So it's a very attractive, low-cost source of fuel. But again, some of the utilities seemingly are having trouble with the waivers. And I've not heard of any utility waivers being granted yet. And I talked to a contact at Texnob Export, and they said they've not seen any other than Centrus. So, what we're seeing, so that's one factor, is if you're a utility, particularly in the U.S., what will you get? When will you get it? And I was asked this question at a luncheon in London. And, what I've seen with the U.S. utilities is when they see a high level of uncertainty, they try to buy some time. So, they've increased their deliveries under legacy contracts with some of the big suppliers, which up until recently were happy to give maybe plus or minus 20% around a base quantity, which, that's just part of the market. That's coming back to now haunt them because the legacy contracts are at much lower prices. I think they're extending their legacy contracts because a lot of them had 2 to 3 year extension options. They've been buying a bit in the spot market. So they've kind of pushed out that uncovered period. I'm hearing more and more to maybe late 27 into early 28. The other thing is the term price. As you know, we entered this year at the high 60s. Then first quarter, we kind of went through the 70s to around 80 by April. And we've kind of stalled out there. The published prices, I think, are 81 and 82. But I've heard of recent agreements being done around 85, 84 to 85. I think smaller volumes, not such a lengthy delivery period. So the term market is starting to strengthen more and more. And I think some of the utilities are then backing off. And they're basically saying, what if something happens out there and the term price weakens? I'm not going to look very good that I've signed a $84 contract. So it's not a single factor, but I think they're looking at a lot of factors. But at some point you have to say, but basically UX and trade tech have said they're aware of offers above their published prices, but I don't think anybody's really committed yet in any big volumes. But again, I think we're going to start to see that as we move forward. As UX and Cameco and others have said, we're still early days in the contracting cycle. The utilities aren't kind of at the end where they say, oh, I'll fill in a little bit here and then I'll step back for the next several years. We're not there by any stretch of the imagination. And I think they're having to look at the hyperscale data center effect, let's call it that. How are these guys going to enter the fuel market potentially? I think the Constellation Microsoft agreement being 20 years kind of above market suggests the high-tech sector is not as sensitive to prices as the utilities are. And so I brought up the point in a call with a very big American bank. I said, do you see the hyperscale guys buying into the fuel cycle? Why not? I'll buy a uranium mine if I need to do that to ensure I've got material. Conversion. It doesn't take Musk to figure out that these guys could come together and say, wait a minute, conversion is like it's a difficulty now. We'll just build a conversion plant. Big deal. It's a chemical plant. Now you got to have an NRC license, but why don't we just get together and we'll build a plant and we'll have our own conversion. Now they won't build enrichment most likely, but do they go to a Urenco and say, you've got a proposed plant in Idaho? Okay, we'll sign contracts for half the output today for 20 years. I mean, they could really start to upset, I think, the long-term fuel market, particularly for the utilities. I mean, what happens when these guys show up and start, as one would say in Europe, hoover up a lot of material for a very long time frame? Why not? They're paying. I saw a study when we were in London, and I unfortunately didn't get to print it off. Someone has forecast between 24 and 2030, the hyperscale data center investments would be $2.2 trillion globally. I see Amazon's budget this year is $50 billion, and they've already committed $47 billion. So we're not talking nickel dime guys wanting their share of nuclear. So again, I mean, it's just kind of, as I've said, it's everywhere you look. So at what point does the term market start to pick up? I think we're starting to see the early next phase, which is really post restarts. We saw Lotus got an agreement with a U.S. utility. Boss has announced they have at least one. So the restart phase, where they don't have to put a lot of fresh capital in, and I always thought it would last a year and a half. We're kind of 2 years into it. But I think now the utilities have to start looking at greenfields projects. And it's not just NextGen and Denison, some of the large Athabasca projects, but others. As you know, I do work with Deep Yellow. They need to look at Namibia, be it Deep Yellow, be it Bannerman, you name it. So, but the idea is some of the feedback is, well, that group needs to offer material at a discount because there's a risk that they won't build their facility. No, they're higher up on the future supply curve. And so there's a higher price required in order to move those projects forward. And as you'll notice, there's been no contracting done except for Global Atomic in Niger on any greenfield project. So they're all waiting. Bannerman just came out and they said they wanted to do a final investment decision by the end of this year. And they've said, no, the market is not yet supportive of their project. Push it off to 2025. They'll wait. I don't see anybody really bringing a project in without utility support at some level. So,
of course, that brings me actually to the next question. What is the uranium current incentive price? Looks like we have a lot of different views on that. What is your view on the current incentive price of uranium?
Well, my view is that it's kind of interesting because I mentioned to you, UX just came out with an editorial called Market Balkanization. In other words, it's not just bifurcation of West and then those who will deal with Russia. It's basically a list of those that will deal with Russia, those that will deal with China as a potential, a small supplier, those that could deal with Russia but choose not to. So there's growing nuances kind of in the market. And they admit that, kind of the marginal mine approach is now what we'd say is in the rearview mirror. I mean, if you're a supplier, and let's pick a number, your incentive price is $60 or $65 or $70. That covers your costs, pays back any financing, provides a modest profit margin. Why would you commit a kilo of uranium at the quote incentive price when it doesn't take, I'll use Warren Buffett now, to look down the road and go, well, wait a minute, the price is like in the mid 80s. And if I had to say, is it going to go up or come down? I think the weighting is clearly, the bias is on the upside. Why would you do anything at that supposed calculated incentive price? Theoretically, there could be projects brought on at 65 to 70. No. I mean, I think you'd have to answer some difficult questions to your investors if you did that. I mean, Cameco, look at them. They did a lot of contracts between 40 and 50. Now, they were in the market at that time. In fact, they'd say, mid 40s. And, we'd go, really? Mid 40s you're able to get? Now, that's affecting their portfolio. They have other pounds. I can't disagree that they'll sell at higher prices, but they now have a component in their portfolio below 50. And I think they've had to answer some questions to investors of, well, didn't you see this coming? Why would you have done that? And I leave it up to Saskatoon to answer all those questions. The other thing, as we start to look at the available supply and the cost curve, it was not a throwaway comment by Grant Isaac, but it was just kind of part of a discussion on Kazakhstan in particular, where he said the days of the low-cost, easy pounds out of Central Asia are now behind us. That is a huge market observation by a company that is deeply involved in Kazakhstan. So again, the Kazakhs, there's still some of that thinking. They have so much resource base, they'll come in, they'll flood the market. No, they're starting to run short on reserves at some of their long-time ISR projects. They're looking at higher costs. They've got the mineral extraction tax now. They've got transportation issues. They're not going to be lower cost, acid availability. I mean, all of that. So when you really look at the supply curve going forward, it really is, as Kamiko has said, the supply curve has just gotten higher. So
I believe that one topic is actually not addressed properly, and this is actually transportation issues, shipping challenges, port strikes. We had a lot of challenges on that side. Would you agree?
Yeah, transportation, interestingly, has been an issue in this business for decades. When I was at Paladin shipping Langer Heinrich material, there was one shipping line that made port calls at Walvis Bay. And it was interesting, it was owned by the Russians. And then it would come in once a month. So you couldn't stockpile at the port. So you had to kind of watch when they expected to come into port and then start moving material to Walvis Bay to get it on that one ship. So, transportation, because it's class 7, because radiation, it's not really a problem. But there have been less and less shipping lines willing to carry it. There have been ports, pick a port, Oakland, that's non-nuclear. You can't ship even, natural U-308 through the port of Oakland. Not that you would, but there's some of that. The strike, we just had, as you know, a strike on the ports on the eastern coast of the U.S. down to Texas. And they're not handling anything right now. Well, is that going to be resolved in a few days, a few weeks? Who knows? As you know, there's one shipping line that's authorized to carry Russian EUP to the U.S., Atlantic Ro-Ro. And I was told they're having difficulty getting insurance coverage. So, not only do you have to have a shipping line that's able to carry or willing to carry class 7, which is radioactive, they have to get insurance. And so then you say, well, wait a minute, what happens when the drones arrive? I think that there is concern amongst the insurance companies. And the other thing before we move off, I'm being told that payment, if you're a U.S. utility trying to make a payment to a Russian bank, is now becoming almost impossible because the American banks may not be sanctioned, but they're saying, I don't want to get drug into that whole sanction environment because I happen to handle a payment from a U.S. utility to a bank in Moscow or St. Petersburg. So again, I mean, but you say transport. I mean, the Trans-Caspian route through Azerbaijan and Georgia all over, does it, quote, work? Yes, but you've got to handle material off a truck to a train to a barge to another train to another, and you finally get to the Black Sea, which isn't the safest place. And I've been told the cost is maybe as much as an order of magnitude above the old St. Petersburg route, which to Canada, I was told, was like $2 a pound. Going the Trans-Caspian can be in the high teens. So another huge cost factor. And if you're, one of the folks on in North America receiving that material, you make the Kazakhs absorb that because you take delivery at a converter, be it Converdyne or Cameco. So you're not exposed to the transportation problems and issues. So again, the Kazakhs, it's not just a simple, we get a little acid here and we'll be okay. I mean, they have a whole long list of some issues, and one of which is transport. The other, we could really get into this. It's cylinders. It's 30B cylinders with overpacks to ship EUP. They're not available in Russia because they haven't been shipped back from previous deliveries into North America. You can't get them back into Russia. So again, there's a whole long list of issues on the transport side that just don't get answered overnight.
Exactly. That's my point as well. Dustin, final question. What is your comment on the recent M&A activities? ISO buying Anfield Energy, UEC acquisition of Rio Tinto Sweetwater plant and Wyoming uranium assets. Do you see any M&A in other continents, maybe in Africa, Australia? What's your take?
Yeah, I think that, it wasn't too long ago, there was a growing, discussions in the industry that there needed to be serious M&A activities. And I think that's what you're seeing. I think the, ISO acquisition of Anfield makes a lot of sense. Somebody has to come in and kind of consolidate the industry. I'm hearing whispers that the Athabasca, we could start to see very large. I mean, we obviously had the fission Paladin situation, which, has not yet been given a total green light. But, I'm hearing that big companies are beginning to look around in the Athabasca because you can make the case they need pounds in the future. So I think we'll see more of that in the future. But the candidates are starting to get kind of less and less, as you know. And the other thing was interesting, it came up in some of the working group meetings at the WNA, which are in support of their market report, is the need for grassroots exploration. In other words, we've gone back and looked at the honeymoons and the Rositas and the Alta Mesas and the, projects that may have been developed back in the 80s, who knows when, and some of the deposits. I mean, one of them, Copper Mountain in Wyoming. I worked for Rocky Mountain Energy back in the late 70s when that was one of their exploration deposits, and it's now come up again on the radar screen. So I think we're going to start to see, well, first, some of it's economics. When the prices were 40, 50, these things weren't, something you would look at. Well, now, if you think the price is going to go into the triple digits, yeah, there's all of a sudden projects or companies that pop up on your screen. So again, I think, they say rising tide lifts all boats. We're going to see any kind of uranium company, even the smaller exploration guys, I think they'll probably see some decent uplift as the price goes up. Then it makes, a lot of things more economic. So yeah, again, another factor in the market that is becoming very interesting. But the other is grassroots exploration. Somebody's got to pay to start sending out those uranium geologists with Geiger counters and drill rigs. And where? Is it South America? Is it Uzbekistan? Is it Northern Territory of Australia? Deep Yellow's got a very good position there. And there's a lot of pounds there. But it just hasn't been, subject. The word is, just maybe to finish off, I've been told there were more pounds discovered in the Northern Territory in the past than in the Athabasca. So there's a lot of material, a lot of uranium there that could be, but when? 2035, 10 years from now, 2040? But you've got to start that now to even kind of meet that schedule. So again, as I said, a lot has changed, a lot has come up since we got together a month ago in London. And I think, January, after the holidays, we could probably have a talk and go, whoa, we never saw that coming. So anyway, it's an
Probably,
interesting time.
definitely, and spot on. Probably in January we will talk with a bunch of new news and
Oh yeah, new issues.
definitely. Mr. Garrow, thank you for coming to my show. It was a great chat. I really enjoyed it. A well of knowledge, Dustin. Thank you very much.
Always happy to. Thank you for your time.